What's up, guys? It's November 10th, 2023. It's a pretty nice day for the Bulls. They had a really good breakout above last week's high, and we trended all day. You just buy the market any time of the day and you would have made money. It's a pretty nice day. So yesterday it was FOMC. It was like FOMC and like the 30-year bond, and there's a bunch of news going on. Markets sold off, created a triple top or head and shoulders reversal. I kid. Head and shoulders is a reversal, so just a head and shoulders pattern. Bear flag, and they sold off for a couple legs. One, two, and the last leg failed. This might look strong, but the volatility is just picking up. Like, what I mean by that is maybe people swing puts, and that's okay, but we've also been in an uptrend for quite some time. I mean, who knows? With swinging puts right here, maybe like one runner is not going to hurt anyone. Well, it did hurt the next day because there was a gap up. So, first 6 bars are gap up with a bear bar. That's not good for the Bulls. They want to see continuation. However, bar 2 is a reversal and it's really nice looking doji. So I'm thinking we're in a range because bears are shorting highs and bulls are buying lows, so the market's range bound. And we can see that with the next 3 bars is starting to sell, and buyers are sitting around the hourly EMA or the high of bar 2, however you want to look at it if you don't use the EMA. Bears start to sell into the 5-minute EMA, and we see a bounce. I think this was a really nice pattern to trade or just to see unfold because it was a wedge. Let me let the whole wedge play out real quick. Okay, right there. So now you guys can see the wedge bull flag. Here is the gap up. You guys know I got really bad allergies on the weekend. It's super sunny here, so excuse the sniffles. Yeah, so here's the gap up bull flag, or you could say from here. The gap up's here, but the range low is there. So if we just included these bars in the gap up, it would kind of look like that. Because these bars are gapping anyways. Hold on, this is kind of like a gap, you guys see. So I'm just like, I am not. Oh man, when I get allergies, I cannot talk correctly. Okay, so I'm just going to extend the gap down because now you guys see this gap as well. So here's the bull flag. 3 pushes down. 1, 2, 3. Micro double bottom. However, I want, like, in terms of like leg 1, leg 2, and what we've been learning, look. So we know about wedge bottoms, and then here's the leg 1, leg 2. I guess we'd have to do a conservative pull. I'm gonna turn off this one and that one. I'm gonna turn off all the images real quick. So yeah, there's the leg 1, leg 2 for the Bears, and then the Bulls get their wedge continuation pattern. So you can trade both ways if you can get out and understand that the market is failing to close the gap. By this bar, you should be out of shorts if you are short. I think that a lot of people hammered shorts because they were looking at this isn't the best bear trend because look at these bars. Bulls were making money pretty quickly within the bear trend. There wasn't too much time late in the day, but this just isn't as bearish as it looks. We sold off into the low of the range. I think the low of the range was right here, and then they sold off, and then we gap back up. 80% of breakouts fail within a range-bound environment per Al Brooks. So this coincides with what Al Brooks talks about and teaches us. We have a bull flag, swing high and swing low put in. When the swing high and swing low gets put in, I just start to extend. I was bullish, so I had the extension up already, but if you're bearish, it would just be like this. But I'm bullish, so swing high of the bull bar. We just go like right there. This was my PT. Oh, let me turn on the EMA. I got long on one of these bars. I think I got filled right here. And this became my PT, and then yesterday's high was my PT. I wasn't expecting the breakout. However, they did get a breakout. So Bulls, the magnet, I think, so at the beginning of the day, I think the magnet was yesterday's low. It was a logical place. However, Bulls were waiting to buy. The gap between the gap up and this low stayed open right here. So there's a bull gap now. And all bear gaps have been closed. See, no bear gaps. Can't draw it because it doesn't make sense. This would be, if this price action didn't happen here, then this would be a bear gap, an open bear gap, and maybe they continue. However, bull gaps are staying open and bear gaps are getting closed, so the market's starting to trend. The market is also breaking out of the morning range. It's about 15, 16 points. So it would make sense to look for another 15, 16 points up, because 30 points is within a normal day's range for the E-mini. However, like, so 30, 60. Let's say I'm looking for a breakout above 60. That would mean the range is 120 points. That's unreasonable. Doesn't mean it can't happen, but the probability of that happening is not too high. So this gap, I think this was people did expect to bounce off the lows. However, the gap stayed open and created a wedge bottom bull flag. And then the bulls wanted to target last week's high. Last week's high has been a magnet all week. The price has been oscillating around last week's high. You guys see it right here. The purple line is last week's high. These bars approaching last week's high was strong. Strong bar, strong follow through. These wicks maybe profit taking. We are approaching resistance. We are approaching the breakdown level from yesterday. That's deceiving. I would not short that, but I could see how people would think this is a good short because of this breakdown level. Last week's high's resistance. The support broke, turn resistance. So now this is resistance, so we need to see a break and retest into yesterday's low. High. Market stalling around last week's high, pulling back into the EMA. This was really cool to see. I had the range already up, and it was a really, oh, dang it. I'm going to delete these gaps because you guys can see the gaps now. Trying to keep the charts clean here, and then extend it out here. So look at this break and retest. I think this is a really nice break and retest. I had a stop order here. However, this is called a high one. This doji is a high one because it's the first. You could say this. Yeah, we're gonna go with this as a high one and get filled here. And what I'm talking about, what I'm bringing this up is a high one usually has sellers above waiting, and it did, because a high one is just a bear channel. Just, you might not see it here, but this is a very broad bear channel on a different time frame. Here. So that would be the broad channel on a different time frame. And we have a breakout, a bull breakout, which also creates another bull flag. And then this creates a high too, because we have a pullback. First high after a pullback, go up. Second high after a pullback. And this is a good high too, because it's priced differently. A high 2 and a low 2 and a high 2 should come at a worse price. And what I mean by price is the entry for this high 1 is lower than the entry for the high 2. So since the entry for the high 2 comes at a worse price, we get more information saying that the bull flag, it's a bull flag and not a double top. Because that, 1 second. Okay, I'm gonna delete this real quick and then I'll pull it back. Delete that. Okay, so if I can bring your attention to this right side of the screen here, that's better. When we take this trade, we don't actually know, is it going to be a double top or is it going to break out? However, when the high 2 comes, this trade, we have more confirmation because this is a 2-bar reversal pattern at the end of a bull flag after a breakout retest. That makes sense how much more information we get by just waiting a little bit more for a high 2. And this bar actually does have follow through. The high 1, this is a doji and then a trend bar with no follow through. This is a trend bar, then a range bar with follow through. So here bulls are buying low, selling high. They bought the low of this range and they sold high. Bears see this as a double top, however they get trapped because we're actually bullish and the market goes. I'm gonna leave this up, but not how I had it last time. That goes right there. Okay, so yeah, we're flagging right under last week's high. It looks like the market wants to break out. Market starts to break out, and it's getting good follow through. This is great for the bulls. Whoa. Breakouts, all whenever the market's moving up or down, it's just it's in search of support and resistance. So the price action, we get a breakout, and now the price is searching for more support. Here we see a vacuum test into yesterday's resistance. I got out on this candle. I really was not planning for that breakout. However, these candles raced up quickly, and it had exhaustion-like tendencies, but there was continuation, and it flagged again. Right now, when I was trading, I was counting 1, 2 exhaustion, so I caught it there. Excuse me. I caught it there, and I was thinking we were going to pull back, and then I wanted to trade a range trade like this, but the market was so strong that it just kept trending higher. Usually, the biggest bars late in a trend would mean exhaustion, but also these days don't happen often, and how do I say this? Sometimes the unlikely thing becomes the likely thing. So it is unlikely we break out, making it likely we break out because there's bullish pressure. And this is actually a really strong candle. This is a really strong candle. They did race up and they found resistance, but they also found more buyers waiting at highs. So, yeah. Market stalling a little bit. Pull back and another breakout. I think we get a break and retest around here. Yeah. So not the cleanest break and retest with yesterday's high. However, it is a break and retest of this bar. You see? And the market goes for another leg. And this is interesting because I didn't catch this in the moment. Once I was already past 1R and here, I closed down the fibs. I just deleted them. However, in this day, 2R of the opening range was hit, which is pretty nice to know. On good trend days that if I can identify early, I might go for 2R. Not 2R. This is a measured move. 2R would be like a risk. I'm at 2 times the opening range, I think. You guys understand what I'm trying to say. And we start to stall around the second opening range, the 200% of the opening range. After we have a spike, we start to channel, so I'm going to delete this now. This is met. I'm going to delete it. I'll keep that there for context. We have 1, 2, 3. Spike, and the market is in a tight channel. This is the channel. And of course, we don't know that until after the channel is done. I'm sure there are some good traders who went like this and pulled here and kind of had a rough idea. If you were going to make a channel before it appeared, that's how I would draw it. Would be from this pivot, this swing, or maybe this swing to like right there. And that kind of gets respected. Or you could wait for, what is the most accurate way? Here's a swing and here's a swing. No, that wouldn't work. I think we just have to do it, wait, like this. This swing low to that swing low. Trend lines aren't going to be perfect, but and you guys can see me projecting it. Anyone can just draw a trend line after the fact, right? Like, okay, look, that got most of them, but the idea is, can we identify the correct swing points to get the trend line, and that will keep us in the trade? See, like, okay, obviously I could draw a trend line, but what are the swing points? I'm thinking just like, this is a breakout, that's way too wide. I think something from down here to down here. That's a pretty good one, actually. That's a pretty good one. From this breakout point to this swing point, kept us in for a while. And then let's see what happens. We'll keep it playing. They break out the trend line, and then it would be natural to test the trend line again. The market's going sideways, and we get a first touch of the EMA. Bulls continue to buy. They're buying until the end of the day. Bears really didn't make any money. It was hard. Unless you scalped those first 2 legs, it was hard to be a bear today. Let's go back to draw these trend lines real quick. So now we have this one. Yeah. So yeah, you can see how trend lines help us gauge the market strength. The market was trending harder here. Did you guys see how I pulled that? The market was trending harder here, and then it got a little bit wider. Still bears are not making money. But yeah, I don't even know where I'm going with that. Trend lines. Draw them and trade them. Don't actually do it. You got to wait for the trend line to be respected, and the price action has to match with the trend line and whatnot. And never trade blindly. The things that I talk about in these videos, there's like in the back of my head, I'm thinking I'm talking to Brook students, but I also realize a few of you are not Brook students, and this is price action, but I encourage you to all do your own homework on these days and do your own reviews and see what works for you. Maybe you don't like the 20 EMA. Some people do 2 EMAs with like a crossover or something. I don't do that, but I know like maybe the 10, and then you can copy and paste. Oh crap. Yeah, just go backwards. What I'm trying to say is you gotta find what works for you, and this is all based off Al Brook's price action. And if you guys like what I'm doing in these videos, really check them out. And those 2 names you saw, Brad Wolf and Rose, those are presenters in the trade room, and they talk about price action all day. The daily chart is here. The Bulls put in a really nice looking bar. They raced. Where did my... Oh. So here is the high of the range put in October, and Bulls tested it. Couldn't close above it, so we could be range bound now that we're back in the last sell-off point, or the markets follow inertia. So if we keep doing what we've been doing, another breakout, maybe a pullback. Now that we've had the first pullback and reversal, that we are now in a bull channel. And I mean, well, only price action would tell us if we're in a bull channel. However, bears did make money. Yeah, bears made money. That was a habit measuring daily candle. Bears only. Okay, I'm restarting. Bears made money, so that means after this spike, after these dojis, that we're gonna start channel. This is a spike and channel. We could pull back. We could have a deep 2-legged pullback into the EMA 50% level, and then gradually come back up. Or bears get their double top, and we sell off again. I don't know, but the markets are following inertia, and we are very bullish. Look at this. Since the beginning of November, we've had 1 bear bar put in. But the fact that they couldn't close here above this range does tell us that we are still in this range. So yeah, it's good. It's gonna be a good. Who knows? I'm gonna update the daily chart with you guys. Wow, the weekly chart, like that is very small range compared to. I wonder what's gonna happen this week. I think like that's a very tight range compared to what we had the last couple of weeks. Like let's look at the difference. So maybe that can get fun somehow. Actually, hold on. Wow, that's the week. That's crazy. I'm just gonna do it like this to get more accurate there. So let me lock this one. That's the last week's high, last week's low, and then we're gonna take the 50% level and project it. That's roughly correct. Okay, close. I came close. So about right there is halfway of this past week's range. Okay, so this is a new range I've got. We are trading in October's range. Pretty small range compared to what we've had. Maybe we test the 50% level of last week's range and go. What I'm going to be looking for is a close above here. I'll be bullish until I see a rejection. We are battling all these bear bars now. Maybe we sell a rejection into the 50% level of last week's range, and then bears want to get down here and eventually bring the market down. Or bulls can bounce off the 50% level and come up. I think it's going to be a good week because this isn't an inside bar; it's an outside bar. Hold on the on the weekly chart we had an outside bar, but just look at it. It's follow through. This is such a strong bar. It's taking out this bar, taking out this bar, closed above this bar, closed above this bar. I mean the EMA, and then this week was a follow through bar. However, if this is a high one, there's usually sellers sitting. So this would be the pullback high one. I'm not sure about that, but if this would be considered a high one, because if it is a high one, then it's a trap because sellers are sitting here. So then we wait for a high two to get long. High two was explained in the beginning of the video. So that's the daily. That's the weekly daily chart, and then the hourly chart. You guys just seen it. We were in the range here. Maybe we kind of formed like a wedge triple top or something ish, right here, and then we sold off and broke out above it, right here. Pretty good week for the bulls. So if they were going to complete the range breakout, this would be their target. They're stalling around October's high. So yeah, pretty cool. Pretty good day for everybody. I hope you guys made money. Just buy and hold. Hope you guys also had a good, safe weekend and are studying. Study. I'll talk to you guys tomorrow. It's gonna be fun. I don't know. I'm getting excited about trading. Things are slowly starting to make a little bit more sense. Speaking these videos out and rewatching the day trades. Jared, thanks for emailing me, bro. I really like seeing your stats. Guys, keep it up. Keep studying. Have a good weekend. Have a good, safe week. I'll talk to you later. Bye.